In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement, the weekly show that keeps you in the know about all things retirement. I'm your host and financial advisor, Rick Everett, with Market Advisory Group, along with the full complement of panelists, to include founding partner and financial advisor with Market Advisory Group, Larry Kloefkorn, our lead CPA with Market Tax Services, Joshua Cicora, health insurance advisor with Market Medicare Advisors Trey Basa, and from Eidelman Law Firm, we have paralegal Jenna Moody. Welcome in, everyone. In this episode, Larry, you're going to visit with us about a couple that you met with very recently by the name of Arthur and Gwen, and fill us in. How did that meeting go?
Yeah, well, they came to one of our workshops and here in the metro area, and from that workshop, they decided to go ahead and take advantage of our offer for a free consultation. Oftentimes I'll begin by saying, so if you took up our offer for this, you probably have something on your mind, so let's talk about that, And so they had a lot of things that were just coming together, and their heads felt cluttered because of so many things to consider. Rick, you probably get this question as well. Oftentimes people will say, what's your forecast for the rest of this year?
Right.
Well, where do you think the market's going to go from here? And I always, almost always, will quip to them, I don't forecast, I don't give guidelines. The reason being, that's what you do in Vegas. Mm-hmm. That's not what you do with your retirement money.
Right.
What we want to do as a financial advisor and investment advisor that's a fiduciary is do what's best for you. And that means we want to set you up into the best win position as possible. We want to minimize losses when the market is in a bear market, and we want to give you the most opportunity possible for growth so that you can realize your account balances are actually going up. And so as we talk about these different things, they start to loosen up and kind of let some of these questions that they have in their mind kind of just fall out. And so one of the things that they're concerned about is they're still fairly young. He is able, even though he's well under 60 years old, he could retire right now and his pension would be sufficient. In fact, his pension's not going to grow anymore by him continuing to work. But he's concerned about what his money is going to do and how the market's going to affect it. Well, the market certainly has a risk to it, but there are other things, and I start talking to him about the fact that there are other things that are risks as well. For instance, people, probably more often than anything else, they bring up taxes. They're concerned how taxes are going to affect them. Estate planning. That's more than just about passing money down to your children. It's also about protecting your money from Medicaid and that sort of thing. In this case, Arthur and Gwen, they understood that all of these aspects of retirement go hand in hand. And, when it came to thinking about Medicare, they realized they have a ways to go before they are eligible for Medicare, so they're going to have health care coverage. So they did start doing a little research and realized it was going to be over $1,800 a month at the very best for them, and that was just unfathomable to them. So, you know, these are all the different things that they were considering, and they were thinking right, and it just so happens they were in a place where we have specialists that can address those.
You know, when you were describing the situation and you were illustrating how with Arthur and Gwen all of these things were coming together, the thing that came to my mind was a perfect storm. But in this sense, it's an imperfect storm if you don't have the answers.
That's true. And, you know, the bottom line is it's not just about how much money you make, it's how much you keep.
Trey Basa with Market Medicare Advisors. You're a health insurance professional. Let's talk about this a little bit. I've met with young pensioners before, people that are retiring 5 or in some cases 10 years before they're eligible for Medicare through the normal channels. They need insurance. So how do you build that bridge from employment to Medicare?
First things first is education. They have to understand what they're coming from, and like Larry pointed out, continuing that workplace coverage was going to be $1,800 a month. That is an absurd rate for what a young pensioner could pay on, say, like the Affordable Care Act. So looking at options from COBRA to the Affordable Care Act, there are going to be questions that are going to whittle down that insurance premium, which is going to be more of a family premium. In the area, maybe couples of hundreds. It really depends on somebody coming in and getting a quote. But looking at what you can get for that workplace COBRA coverage, continuing that, and that $1,800 price point, we sit down and we talk about, this is what your business was paying, and now you have to assume that responsibility, and your coverage doesn't change. It's the exact same. Whereas if we look at something on the Affordable Care Act, we can get something different, something a little bit more acclimated to your new position in life now that you're happily retired at 55.
A lot of clients will stop their primary job because they're ready to slow down. They've got the pension coming in, but they're not content to sit at home. They want to get out and continue working, you know, to be active. So if they were having an instance where they were on an employer's insurance, they're going to go ahead and terminate employment there. They need insurance coverage. They've got another job on the forecast, on the horizon, but it's 2 or 3 months down the road before that insurance eligibility of the new job will be in place. Is there short-term bridges you can build for people also?
Yeah, so like with regular Medicare, there are special enrollment periods that if you leave workplace insurance, you have the opportunity to enroll into something like the Affordable Care Act and pick up something. And I'm not totally familiar with the disenrollment process, but I have heard from the other resident healthcare advisor that it's relatively easy to disenroll to start another workplace insurance. That is the short-term gap that we do recommend, especially when somebody is in between jobs below or under the age 65.
And Larry mentioned Vegas. Healthcare is not something you want to roll the dice with.
Absolutely not. It is a bit of a gamble. When you're looking at other jobs, you're not 100% sure what insurance they're going to provide, what coverage it's going to be, and at what rate you're going to get it.
You know, Arthur and Gwen couldn't do it all on their own, and you don't have to either. They needed a team that worked together. Arthur and his advisors of the round table, if you will. Investments, taxes, healthcare, and estate planning, all in one place. If you'd like to set up a complimentary no-obligation visit with these advisors of the round table, our operators are standing by right now to take your call at 316-252-8707. That's 316-252-8707. And be sure and check out our website at ionretirement.com. We'll be back with more Eye on Retirement, and it comes your way right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors, all in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you to get you answers in real time, to help make sure you don't miss something that puts your unique plan off course. You shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Eye on Retirement. Larry, in the last segment, you introduced us to Gwen and Arthur, who could retire today with a full pension, but health care was keeping him from doing so. Did they have other issues that you could address to make he and Gwen be more prepared for retirement?
Yeah, they had some concerns because his mother has Alzheimer's, and they've seen the devastation that takes place on the family, and the resources that the family has. And they were really concerned about them, what their own situation would be if that happened to them, and what it would do to their two sons. So one of the things that they wanted to address is finding out, is there anything that they can be doing to prepare and help protect their sons and preserve as much of their assets as possible.
Jenna Moody, lead paralegal with Eidelman Law Firm. Tell us about Arthur and Gwen's situation and others like them. This is fairly common in our business.
It's very common, especially around here. There's a lot of farmland around here, and Arthur happens to own around about 160 acres of farmland with his family. And so he and his brother own about 50%, and then his uncle's children also own another 50%. So when you start talking about estate planning and farmland is involved, it can start to look like this ugly piece of pie that starts getting divided. When you're thinking about, when you're learning fractions when you're a kid, and you start dividing 50% and then divide for his two children, and then 50% gets divided for his two children, and this person over here has 4 children. So you start getting a lot of family members that own all of this farmland. And one of the things that was in this situation, all of the family members have to agree if this farmland is to be sold or if something needs to happen to it. So when you're looking at all of this, Arthur knows that Alzheimer's runs in his family. And so what's going to happen if Arthur has a long-term care event, if he's, looking at nursing care, if he's looking, at some kind of long-term care. And so when you're looking at long-term care and you're looking at a possible Medicaid spend down, if Medicaid's going to be in your future, all of this farmland that he owns is, his portion of it becomes part of a spend down. And that gets scary for families. It really does, because, there's that farmland's been in the family for generations. And are they really wanting to lose it to a lien, from the government? And so they have to figure out some strategies. They have to start thinking about what they can do early, pre-planning rather than reactive planning. Because if they wait and all of a sudden he has early onset Alzheimer's, or he has a stroke, or whatever it is, and they're having to do emergency spend down planning for Medicaid, then there's not a whole lot that you can do, and that puts the land at risk.
And whether the farmland is the asset, or the asset is a sizable bank account or a home. I think what you're referring to is a Medicaid trust, which would actually insulate those assets from being spent down by Medicare.
Yes, Medicaid, yes.
Or Medicaid, yes.
Yes, so there's a lot of different kinds of trusts, and there's a lot of strategies that, our attorneys can put into place to protect, your assets from different scenarios. And in this particular instance, yes, he's looking at not only how to protect his piece of the pie, but maybe also how to protect the rest of the family's pie and protect the rest of the farmland, rather than having that mess, for the whole family to have to deal with.
Thank you, Jenna. Larry, did Gwen and Arthur have tax issues as well?
Well, they did. They knew that they would have this pension, so it means and it was a very generous pension, and that he earned, I should say, and so they knew this income was going to be coming. They'd have Social Security at some point that would be coming, and before you know it, they have more income maybe than they really needed. And then he also has some money that is in a deferred pre-tax status that when he does retire, then he can move to an IRA and do a rollover. So they have these different types of monies, and they know they're taxable. And at this point, they're concerned a little bit about how this tax of the farmland may enter into it. Wow, do we need a tax advisor?
Joshua Cicora, lead CPA, Market Tax Services. What pitfalls could you possibly see headed in the direction of Gwen and Arthur?
Well, long story short, lots of pitfalls. The farm income's going to keep coming in, and they don't really have a lot of control over that. That creates problems because they're just kind of at the mercy of however that farm does without much in the way of say-so over it. And the lack of predictability makes it tough to preemptively deal with those taxes. They've got, we talked about Social Security and how that's going to play in with these issues. Not having control of that farm income means that their Social Security may be more taxable than it would be otherwise, and there's really nothing they can do about that. Gwen was running that daycare out of the home. Now that does create complications with the Social Security like we were just talking about, but it also creates some opportunities where they can take some extra expenses as deductions and mitigate some taxes in that fashion, maybe set up some opportunities to save for retirement that most folks wouldn't even have at their disposal. And then there's that retirement account that's coming down, right? And yeah, they could do nothing with it. And one of these days they're going to have to start dealing with taxes, and they're likely to be painful with all these different things going on. The generous pension, tax planning really can help out there, letting people, or Arthur and Gwen in particular in this situation, deal with those taxes proactively at a time of their choosing, especially since they're so young for this piece of it, versus letting the taxes just do what they're going to do and you deal with them on default, which can be painful both to Arthur and Gwen. They're talking about the two sons, being concerned about them. That can get painful as well. Should they inherit that account? Yeah, lots of problems if they do nothing. But if we come in and talk about tax planning, we can help deal with these issues and try to set it up as a more successful retirement for them.
Thank you, Joshua.
Yeah.
Unaddressed, all of these issues can become so complex. Income affects Medicare costs, taxes affect estate planning. There's a push and a pull, and all of these actions could actually, if not executed properly, siphon money off of your nest egg if you don't have a team working together for your benefit. Market Advisory Group is that team. To set up a complimentary no-obligation visit, operators are standing by. Dial that number, 316-252-8888. 8707. And be sure and check out our website at ionretirement.com. We'll be back with the final segment of our show, and it comes your way right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have by running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
I need a place to go to see about my investments. Ask my friends if they know about holistic retirement. Everything in one place. Estates, taxes, and Medicare. People meeting face to face. Advisors to help me get there.
At Market Advisory Group. Retirement under one roof. At Market Advisory Group. We're invested in you.
Welcome back to the final segment of this week's episode of Eye on Retirement. The last two, we've been talking about Arthur and Gwen, but in this final segment, I want to turn our attention to a viewer question. And by the way, if you'd like to submit a question for possible use on a future show, just go to the website ionretirement.com and click the button that says Submit Question. If we use your question on air, we'll be happy to send you some swag. This week's viewer question comes from Howard L. Howard asks, why can't I just leave my daughter my 401k when I die? Now, this seems like an estate planning question, but Howard specifically mentions tax bombs, so I'd like to focus on the tax implications of the maneuver. Joshua Cicora, leaving the 401k to a child when someone dies. Best move tax-wise?
It is a move. I don't know if it's your best move. Now, there can be reasons to leave money in a 401k for a period of time. But once you're looking at passing that account on to your beneficiaries, it probably makes some more sense to deal with the taxes proactively before you pass. And that's because whatever's left in that 401k or a traditional IRA, I mean, it's all the same treatment. Whatever goes to your beneficiaries goes to them in what's going to be the highest, most likely to be the highest income earning years of their life. So that means that the money they pull out of that account will be taxed at the highest rates that they will likely have to pay in their over their lifetime, right? And they're going to be forced to take it out over a 10-year period. Now, a lot of times people take it out faster, which is actually more of a problem because then there's going to be more taxes in play. When we work with clients who have this type of an account, we'll talk about trying to deal with some of these taxes now while you're in control of how that's going to cost versus passing off what should be a blessing to your children that has a tax bill tied to it. And there can really be situations where you have multiple children in play, and then Uncle Sam becomes the biggest beneficiary out of your accounts because he's going to take, 25, 30% out of these different accounts. If you've got 4 kids, Uncle Sam's getting enough out of each of them that he gets the majority of what you had worked and saved all these years to then pass on to your kids. And for most folks, they like all of their children more than they like Uncle Sam.
Amen. Larry, it's a fairly common question you run into, though, is how do I set up for my kids to inherit?
And I've seen the gamut of this sort of thing. You have some people that say, look, I earned mine, they can earn theirs, or they're doing better than I was at this point. So, I had one gent who said, I want to spend my last dollar on my last day, Larry. Plan that for me. I said, can you give me an idea when that last day is? I had another one that said, I want my last check to bounce. Okay, I'll do my best. But when it comes right down to it, people would rather choose where their money is going to go rather than let it just go to taxes.
Thank you, Larry, and thank you, panel. This is just one of the many questions we receive day in and day out at Market Advisory Group. We love when you send them into the show, but if you have questions that are more time sensitive or more complex, Market Advisory Group is here to help in real time with a complimentary, no obligation visit with our team. To accomplish that, simply dial 316-252-8707. And again, be sure and check out the website at ionretirement.com. That's all the time we have for this episode. Thanks for tuning in. I'm Rick Everett, along with the entire panel, reminding you that we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Eidelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.